If you've been watching the crypto space or the financial news cycle lately, you've probably noticed a surge of headlines about certain digital asset projects that have been linked, directly or indirectly, to a very high-profile public figure. These projects gained massive attention, saw huge price swings, and are now reportedly being reviewed by U.S. financial authorities. And the story has quickly become one of the biggest talking points across both the crypto world and mainstream news. Today, we're breaking down what's really happening with these high-visibility crypto projects, why government agencies are paying such close attention, and what this could mean for everyday investors. Because whenever influential personalities and fast-moving digital markets intersect, volatility always follows. Let's start with the basics. Over the past several weeks, several new tokens and blockchain-related projects have appeared online with branding, imagery, or community-driven narratives connected to a major public figure. Some of these projects were launched by supporters, some by opportunistic developers looking to ride a trend, and some gained traction simply because social media discussions pushed them into the spotlight. As interest grew, these tokens experienced dramatic surges, sometimes doubling or tripling in value within a single day. But just as quickly, some of them saw sharp declines. We're talking drops of 40, 50, even 70% over a very short period. To new investors, it looked like another round of hype-driven trading. But to regulators, those sudden spikes and crashes raised concerns about potential market confusion or investor misunderstandings. And that's where the reviews reportedly began. According to circulating reports from multiple media outlets, U.S. financial watchdogs are now taking early steps to examine how these high-profile crypto ventures were promoted and whether investors may have interpreted the marketing as an official endorsement by the public figure being referenced. No accusations have been made, and no formal action has been announced. But agencies appear to be focused on two main questions. First, were investors influenced by branding or messaging that made these projects seem more official than they actually were? And second, did anyone benefit unfairly from unpredictable price swings fueled by online excitement? These questions matter because U.S. financial rules take investor protection seriously, especially when market behavior becomes tied to public personalities, viral narratives, or political moments. Now, let's look at the market side of the story. On one hand, these high-profile tokens brought new attention to crypto and attracted thousands of new retail investors. On the other hand, they introduced a type of risk the industry isn't used to handling on such a large scale. When a token is tied, even loosely, to a well-known figure, speculation tends to spread faster than facts. And in a climate where digital assets are already volatile, even small rumors can trigger big reactions. Here's where things become even more layered. Over the past 2 years, a certain well-known public figure has become a major conversation driver in digital asset discussions. Their previous involvement in blockchain-related merchandise, combined with public comments about the industry, helped fuel speculation around new projects that reference them. That mix of public interest and market momentum often leads to confusion, and confusion is exactly what regulators try to prevent. This is why they're reportedly reviewing how these projects were presented. If investigators determine that investors mistakenly believe the projects were officially supported, exchanges and platforms may take precautionary steps, such as issuing warnings, applying additional labels, or in extreme cases, restricting trading. But there's another possible outcome worth considering. The reviews might simply lead to clearer guidelines on how public figure-themed tokens can be marketed. And honestly, the crypto industry could benefit from more clarity in this area. Now let's focus on you, the investor. What does all this mean for your portfolio? First, always separate hype from fundamentals. A token gaining popularity because of a public personality is not the same as a token with long-term utility. It might surge overnight, but it can fall just as fast once the excitement fades or new headlines emerge. Second, verify everything. Just because a project uses the image, quotes, or symbolism of a well-known figure does not mean that the person has endorsed it. In many cases, they haven't. And misunderstanding that difference can make the market extremely risky. Third, diversify. Putting all your money into a trend-driven token is rarely a stable long-term strategy. It's important to balance your portfolio across assets with real utility and assets with short-term high potential. And finally, stay informed. Regulatory updates, whether official or early stage, can affect the entire market. The more you understand about how these reviews work, the more prepared you'll be to navigate sudden changes in sentiment. If you found this breakdown helpful, don't forget to subscribe for more clear, unbiased explanations of the biggest finance and crypto stories shaping the markets right now. And if you want updates on market volatility, digital asset regulation, and emerging trends, make sure to like the video so more people can stay informed. Thanks for watching. Stay smart, stay cautious, and stay ahead of the markets.